Hi everyone, in this video we're going to look at how the stock market, mainly the S&P 500, the Nasdaq 100, the Russell 2000, and the NYSE Composite indices have performed in the month of May. What you're looking at is what's called a seasonality chart. The numbers along the top of the column represent the percentage of time that the index has moved up during that month. So you can see there are months along the bottom here, January, February, March, all the way up through December. And then you have this column up here. So let's go to May, since we're talking about May in this video, and it says 75. You can see we have 20 years of data here from 2004 to 2023. We don't want to put it to 2024 because May hasn't happened yet, so it wouldn't matter. We want to see how the last 20 Mays have performed, so we're looking at the last 20. 75% of them have moved up, so the index closed higher at the end of May than where it opened at the start of May. So 75% would be 15 out of the 20 years. So it actually moves up quite often in May. The bottom of the column says what the average return is. So May is a lower average return despite having moved up quite often. The gains are usually pretty small, or there's dispersion, right? Because we might have some bigger up years, but we might have also had some bigger down years during May, all contributing to this average of 0.4%. Now you can see how this might change over time. If we look at just the last 10 years, May starts to look a little bit better. It's moved up 9 out of the last 10 years for a 0.9% average gain. So overall, a pretty decent month for the S&P 500. If we look at the QQQ ETF, or the Nasdaq 100, gotta get rid of an ad here, I think. There we go. So we can move this out to 20. And we see how the QQQ, or this is the ETF for the Nasdaq 100, how it has performed 65% of the time. It has moved up while having an average gain of 1.6%. So a pretty strong, good average gain. Nice to see. And moving up more often than it declines during the month. So overall, a decent month for that. Again, we can zoom in and look how maybe it's done over the last 10 years. And we see even a little bit better. 7 out of the last 10 years, the index has moved up, and and the average gain is 2.4%, including all the up and down years. So the 7 up years and the 3 down years. So a nice month again for the month of May doing that. Let's go to the Russell 2000, and we can use the symbol IWM. And we see once again that, let's zoom out to 20 years. Come on, there we go. And similar to the other indices we looked at, 65%, it has moved higher than where it opened, and a 0.6% average gain. So again, not too bad of a month on average. Tend to see prices move up. Better over the last 10 years. 7 out of the last 10 years have been up in May, and a 0.8% average gain. Let's look at the NYSE Composite Index, because it is one that's a little bit different. And if we go out to, get rid of the last year, out to 20, we can see good performance again in terms of how often it moves up. 14 out of the last 20 years it has moved up, or 70% of the time. but the average gained 0.4%. So actually a negative return on average holding through the month of May for the NYSE Composite. That can be important because the NYSE Composite is a very broad measure of stocks. It includes all the stocks on the NYSE, different sizes, different industries. So it's a broad measure of kind of a typical average stock if you were just holding. But if you're trading an actual index or stocks that would be included in an index, then the other ones might be more representative. Again, if we drop down to, let's say, the last 10 years, again, still a negative return, but we have overall tends to move up more often than not, but the down years have just eclipsed the up years by just a shade to create an overall negative return. So you can see how the other months have performed as well, but coming up to May, this one would be something we want to consider. Whenever looking at seasonality, always remember this is backward looking. It doesn't necessarily indicate what is going to happen in the future. Just because some of these indexes have performed well in May in the past doesn't necessarily mean that they'll perform well in the future. So just always keep that in mind. This is backward looking and doesn't necessarily predict what will happen this year.